The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tommy O'Brien, and Darrell Martin.
Hi, folks. Basil Chapman sitting in for the three usual hosts and in this Bull Bear Binary Option Hour brought to you by Nadex. And just my pleasure to be sitting in. Tom and Tommy, of course, are at the trade show in Marriott Hotel in Manhattan. It should be really exciting. I was very much wanting to be there, to meet many of the hosts. I haven't met quite a few of the hosts previously, but just didn't work out. Meantime, back here at the ranch, we'll just run the numbers. The Dow is up 215 at 16,607. You tell me whether or not you can get the impression that many fund managers over the last week just completely missed this turn. And one of the reasons I think they missed it was the way that the market came back on the 11th of February to retest the 20th of January's low bar, and in some cases took it out, in some cases didn't take out that low. But the move was so, I wouldn't say really scary, because the volatility index did spike, but it didn't spike as sharply as it usually does. But it was very nerve-wracking in the sense that it felt as if there was no underpinning for the market unless you did technical analysis. If you did technical analysis, you would have been seeing that there was a pattern here that looks like an H. Actually, the best way to do it is to go. I'm the host of the Tiger Technicians Hour, usually 11 o'clock until noon. I'll be doing that today, straight after this show. And same call-in number, 877-927-6648 as this show. And I also have a daily subscription service called The Opening Call. Been here since 2003, I believe it is. And for my subscribers, every single day, based on the Chapman Wave methodology, I discuss the Dow chart. Normally, I'd be looking at the Dow chart because of the relationship that we saw from the low of August. Let me just squeeze this chart and you'll see exactly what I'm looking at here. Okay. You see that low in August? With a Dow went to 15,370, there was a series of moves to the downside. Look at those black candles. Bam, 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 bam. And then what happens? It tests the mid-15,000s, goes to 15,370, and then spirals back up, has a horrible session the next day. Scary. On the 25th, and then starts a really good move up, consolidates, turns the 16,000 area, 15,970 to 16,000, into a strong support level where you can see there's a dashed line, looks like an H. And then there's a big move to the upside that goes from 15,942 with the retest on the 29th of September, very successful, way higher, 600 points higher than that previous low of August. And then the market spirals up to 17,977. That was on the 3rd of November. Hey, wait a minute. Then all of a sudden, you see these patterns here, this channel, this declining channel, these pink trend lines. You see the way the price kept making slightly lower lows, slightly higher highs, slightly lower highs after making that 18,351.36 high of the 19th of May of 2015. And then when it took that out, it went spiraling down to the 24th of August low. Well, wait a minute. Look at this. We had exactly the same pink channel line that got taken out on the downside right there on the 6th of January. And then that started to cascade to lower lows, but not as deep in single-day price moves as you had going to the August low. But instead, what happened, it was just 2 mini days of up moves, then bam, it saws all the way back down, goes to the low of the 20th. And I'd say to subscribers, we've got a left side, right side price time match here. We've got a whole bunch of things going on. And that candle, what I call a Chapman Wave Roman candle, just like you had here, is a very important candle. And we watched it as the Dow went from the 15,450 level to 16,510. Went to a peak C, the third highest peak, comes back down, retests, makes another doji. Doji candles after a major move to the downside can be very positive if there is a close, and this is a Chapman Wave expression, Chapman Wave Roman candle, looks just like this, where the price opens at a certain point, makes a fraction, little tiny wick, and then plummets to a much lower low, only to have a rebound, and the rebound is 50% or slightly more to the entire candle's length, and you've got a long wick to the downside. And then if the price starts to trade halfway into that wick, that's very negative because it's bound to retest the lows. Instead, if it closes above, especially 2 out of 3 sessions, that's very positive. Hey, wait a minute. Didn't we just get that? We got that. And look what happened. So we switched from a short position Thursday a week ago, that was the 11th, the 11th of February, to the long side, very long side. And the next day we added another position. And on Friday, I was discussing in my show, the Tiger Technicians Hour, that it was really important at this particular period. I wanted to lower the stops on our positions because if there was a chance that the market would still close very nicely to the upside. Well, what happened was the market did exactly that on Friday. And if I put in a stop, we were to go stop down. It would be very difficult to get back in that position with a gap up like this. And that's the pattern that we're looking at. See that little schematic right there? I'll give you all the numbers when we get back. Basil Chapman sitting in for Tommy, and Darrell. I'll be right back after this break.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionics, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Is in the 10-minute chart, you'll see there's just a beautiful stair-step move that's gone to another peak in the Chapman Wave right here with a high of 1943. And what I'd said to subscribers in my daily opening call for the E-minis, I give a synopsis of what we're looking at for the E-minis every day. The 120, the daily and the weekly I show. And let me just give you this, if I can get it correct here, ESH16, trading up 24.75, and you'll see that in this particular chart, waiting for data. Doesn't usually do that. Why is it messing me around here? Okay, there we go. Close, and it should come right up. So what we're looking at in terms of, all right, let me get out of that, since it's giving me a little problem. Doesn't usually do that. What we're looking at is that there was a resistance area between 1939, I'd said, and 1941. A breakout above that starts to target the 1944-45 area. So far today, the high has been 1943 exactly. So it's nothing. This is fabulous action at this particular point, and we've got a couple of things that I want to do. First, I'm going to go to Brian in Jackson, Mississippi. Brian, how are you?
Hey, Basil. Thanks a lot. Hope you can hear me okay.
I certainly can.
Okay, great. Thanks. We had a little trouble with the call screen at first, but I'm actually taking. I'm trading on the Nadex, and I've actually long in my regular account, brokerage account with the SPYs, but I've got a fairly cheap, out of the money short position on the binaries at 1932 for today only. Only because on the 31st of January, that candle was kind of sticking out like a sore thumb on what I'm looking at, and until it passes that particular candle, do you kind of see what I'm talking about?
Yeah, so, okay, let me just do this. I'm looking, what time frame do you look at for your intraday if you're going to go short intraday? Do you look?
On the intraday, I use 15 minutes. 15
I'm sorry, you use what?
15 minutes for intraday.
Okay, if you don't mind, could I do the 10-minute right now?
Sure.
It's very close. The reason why I prefer to do 10 minutes, kind of what I normally be looking at, and what I've got here is that we've got a peak D, and the fourth highest peak in the Chapman Wave. So three things are going on here. I'm going to do this. I'm going to take that chart. I'm also going to just use this chart at this point. So you say you've got a 15-minute chart. I'm going to change that to 15 minute. 50 minute, there you go. So my 15-minute chart says there's tremendous support to the 1933 and the 1930.50 area. The 9-period exponential moving average is at 19, I think it's 27. Let me double check, 1937 I meant. And right now, I don't have any resistance points. I want to go to a shorter term to see where the resistance points are. 15-minute doesn't give it. Let me just check. So these are what I call Chapman Wave support and resistance. There we go. 1943.25 is the resistance, and 1937.10 on the 2-minute chart. Now, the only reason why I want you to bring it up is if there are no resistance points, it says that at any point there could be a sudden spike to the upside to attempt to re-tackle the previous high. So I'm going to go back, and I'm going to go to the E-minis just to see what's happening. Now, I think as a trade, I believe that you've got a very good opportunity. Well, let me put it this way. The spike that we saw, whenever there's a spike that starts overnight, it started in Europe, it went through, it started in Asia, it went through to Europe, and it came through this morning. And the give back this morning, I just don't understand why my 120-minute chart is not updating and saying that it needs to, it's waiting for data. That's very unusual. Okay. Now, in this particular instance, do you have a long position, but you've counteracted it with a short position, or the only position now that you're looking at is the short position?
Well, that's what I use Nadex for, actually. I use it as a daily buffer or hedge against whatever position I have on in my regular trading account.
Right.
I use it, that way I can kind of.
Yeah, that's a fabulous. Yeah, that's a great way to use it. Yes.
But I'm just looking at this looks like either a double bottom here, or it's either going to break out from here or go down is the way I'm looking
at it. So now let me just do an analysis, and we'll, as I do the analysis, especially since you're doing the binary, since you're doing a trade that has a core position with an insurance policy attached, well, let's just deal with that. So I'm going to go to the VIX index, VIX.X, and the VIX index has plummeted down 74 cents to 19.80. It's down 3.56%. Actually, I said plummeted. If it was down at 19.20, very close to the 18s, then I'd say plummeted. At this point, it's just pulled back quite sharply. It's actually a fairly smooth move to the downside. So that says to me there's a little room for a bounce in the volatility index. I'm going to go, if you don't mind, I'm going to go to, I wonder if I can get it here on this index, VIXG. I hope I can. Ooh. All right, well, I'll have to wait for the break and figure out what's going on with the 120-minute chart. I do need it. What I'm looking at, though, Brian, is that, do you use the VIX index at all?
Very seldom. Very seldom.
Okay.
I pay attention to, I'll kind of glance at it, but I don't chart it.
So because you're using a methodology here, I'm going to use the term sophisticated only in the sense that it requires a certain diligence and it requires a certain a discipline that goes to a lot of experience. I'm going to make a suggestion to you. I don't know about how many screens or what you're looking at. If you actually have the opportunity to put in one little chart in your system and just have it sitting there, not just as a price, but as a chart. And I'm going to suggest that if you can do the VIX, but maybe you don't even have to do that if you don't want to get into the indexes. You can just go into the TVIX. It performs very much like the VIX. It is the 2 times short, 2 times long, the VIX index, and it's trading at 860. So it does the job, and you don't have to worry about whether it's an index, and it's far more sensitive because it's going to give you overnight. It won't give you the price unless you put it in, but it won't give you the chart, but it'll give you the price. It's always in movement. So what's really important about this is at 8:59. Now this did plunge from the close on Friday of 1920. I did it for my subscribers to my opening call over the weekend. I sent out a whole bunch of charts. One of them was the volatility index. So what's really important, remember, you might have heard, maybe you didn't, but I was mentioning earlier that I believe a lot. In fact, when I say a lot, I'm going to suggest that the majority of fund managers who are looking to put some money to work probably either got some money in but not nearly enough, or they missed the move, or they got in maybe Tuesday, Wednesday of last week, and then when it suddenly turned around of the 11th and 12th, and then when it turned around that week, they actually got out of some of their positions. So the way I'm looking at this, I think the upside.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman sitting in for Tommy and Darrell in the Nadex binary hour. And this is a very interesting market because the Dow has gone back to plus 204. The S&P, let me just give the numbers. The S&P is up 25 at 1943. Let me move this away here so that we can do it. We've got Brian online. We're looking at the S&P, wanting to know if there's going to be a pullback, what kind of pullback. And my suggestion was that he follows the TVIX, which is the VS 2 times VIX short-term index. But it really is a fabulous vehicle in terms of being able to give you what the volatility index is doing. If you're not able to get the volatility index, that number one. And number two is because it's an ETN, it actually trades. It trades with the price overnight. I'm not sure about trading it. I don't know if we've ever traded it overnight, but it does show you the price, and therefore it must be trading somewhere, and that's good because the VIX index might just be stuck on the index is closed. So this is what I was going to suggest, is that you might get used to seeing the volatility index in relation to the market. You could have, I don't know if you're able to do it, you could have the S&P, the SPY, above the TVIX so that they make a counter trend move like a mirror image. And that's going to help you to show, for instance, technically now I'm looking at the TVIX on the 120-minute chart, and it's got a pattern that I call the Eiffel Tower, where it goes straight up like an inverted V, and then it comes back down again. So it could have a little bit of a bounce. But as I said before, I really do believe that there are so many people that just missed completely this 1,000-point move to the upside, that there's going to be a lot of chasing. So the answer to the question about, on a short-term basis, what would I be looking at in terms of a pullback in the SPY, I'm going to suggest 10 past 10 to 10:20 was really the first opportunity that I would have seen whether or not there is enough selling pressure after that explosive opening to say, uh-oh, a chunk of the work has been done, and now we've made the high and we're going to make lower lows and lower highs, but still close quite decently. But instead, what I'm looking at here, I think, from what I'm seeing, is that there's enough buying pressure to maintain. And do you mind if I just look at the SPY instead of the S&P for the moment?
Sure, yeah.
So there's enough buying pressure at 194.59 to say that on a worst-case basis, if by, let's see, so you are looking at, are you 1 hour behind us in the north? On the east, I mean, the East Coast?
Central time zone.
So that's 1 hour like Chicago. Okay. So in other words, right now it is 9:30 your time, right?
Correct.
Okay, or 9:33. And I would say that if by 10:30 your time, going to 11 o'clock, if there is no pullback in the SPY below this candle right here, that's the candle of 10 minutes to 10 with a low of 194.24. Sounds like 20 cents. What's the big deal? In a market like this, support levels can actually be very tight. So if there's a break below that, then 193.98 will be the 9-period exponential moving average. But the way I'm looking at this, the way it's broken out, and the way it's holding right now, I'm also watching the IBB, which is the biotechs, the Nasdaq biotech, and it's only up about $1.59. I had a fabulous day on Friday, and that's saying to me that we've got to keep our eye on probably that's the area. I think there was a downgrade there somewhere. So I'm just going to suggest to you that it's insurance. So in other words, if the S&P goes higher, that's good for you, but at the same time, you're going to lose your insurance, correct?
Right, and I've got a lot more. I'm looking at, like you are, longer toward the end of the week on the longer term on my regular trading.
Okay. So in other words, just like real insurance, your core holding is way more than your insurance.
Right.
And in fact, what'll be the best thing about it is that if you lose your insurance, it means you're more than making it up in the core position. So let's treat it just exactly that way. I wouldn't get too excited. I'm just going to say to you, there could be a pullback. The pullback could be between 50 to 70 cents. But if that pullback goes 50 to 70 cents, and then at 2:20 this afternoon, that's your time, 1:20, if the market is not showing any strength to be able to rebound to try to retest the highs, there might be some kind of a sell-off. But I've got a feeling that these gaps to the upside are not going to be filled for a while because just too many people are not involved. They're not long at all. Most are short if they have positions, and the ones who are long weren't able to get back into their positions. And one of the reasons is when I went through bunches of stocks over the weekend, a lot of stocks got really badly hurt, and they broke some key support levels going into last week. So I think a lot of fund managers would say, hey, we have to find some support because the level that I was looking at 2 weeks ago was taken out. So I'm just looking. Yeah, someone in the den just said, called sell everything. He said, FANG stocks, I think it's a he, FANG stocks look awful. So that's Facebook. Yeah. So I think your insurance policy should be just treated as insurance policy right now. There are two things I'm going to say to you. I would take off the insurance policy if we close towards the low of the day today and we open lower tomorrow. I'd start to take that off, get ready to put it back on at a higher level. I don't think there's going to be more than 1 day of consolidation if there is a consolidation today or tomorrow. So I'm actually quite positive, more positive than I thought I'd be on Friday. Well, with Friday's close was fabulous action. I liked it very much. Now I'm just seeing buyers keep coming in because they've missed the move. So I just wanted to give you that. But okay. I think the idea of insurance was good. And I'm going to give... Yes, you got a question?
Oh, no, yeah. Well, I had one more question, but I can let you finish your analysis. I just had a question about more buyers than sellers. Do you have time to take that question?
Yeah, let me just finish my one statement, which was, if you can try to put a TVIX on, just to get used to it, don't do anything with it. Just follow it, and at a certain point, it's just going to jump out and say, "Hey, Brian, this is the way you should use me." It'll tell you the way to use it, but keep it, because if you're doing technical analysis, it's nice to have something else. Yes. So, question away.
Oh, I hear a lot of analysts and other people talk about, like on CNBC and some other places, about the market, there being more buyers than sellers, or more sellers than buyers. But isn't it actually always the same amount of buyers and sellers on a particular market?
No, well, actually, let me just phrase it a little differently. For every buyer, there's a seller, and for every seller, there's a buyer. That's really what you're saying, correct?
Right.
So it's not that there's equal number, because there could be more sellers than buyers if you're looking at the selling and the buying, because the numbers look so different, because the up volume to down volume. But the actual fact is, absolutely, for every seller, there's a buyer, and for every buyer, there's a seller. And if you... I'm going to discuss this as we move on. So I'll talk about it in relation to the VIX index, and you might get something from that. Hey, great questions, and I hope I did some resolving of it for you.
Yeah, thank you so much. Appreciate it.
Thank you very much, Brian. We'll be back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
with like a W formation. That's the potential that we could have here in the Dow daily chart. But two things have to happen. One is within this arch formation, because there was a successful test, a higher test at 15,503 than the January low of 15,450 in the Dow. It's very important to close decisively above the 16,510 arch high. That's that level right there, made on the February the 1st. It's very important to close in this in the patterns that I look at, to close sharply above it. And my recommendation for subscribers was we want to see a close in the 16,560s or higher, preferably starting to go into the 16,000s. What's the high today? 16,616. That's good. There's a left side, right side price time match that takes you to tomorrow. And that target was 16,651. I think it's 51. Yep, 16,651. That was the high of the 8th of January. We're close to that. And that's by tomorrow. But even more important, you want to see the MACD, the moving average convergence, which deflected positively in that left side, right side price time test of the H pattern. Right there, see, you made that number of bars to the middle, to the peak C, that little doji candle right there, small candle, like a plus sign, came right down to that date, which is exactly right, on the 11th of February. Now it's going to the upside with the left side, right side, Chapman Wave price time match, plus the inside wedge target line. And that is targeting that 16,651 level, as I say, by tomorrow. If it does it today, that's fine. What I'm really expecting here, you see these white candles, 1, 2, 3, and then a little black candle, then a doji candle with a close at the high of a very small candle, and then today's white candle so far. The day is young. We have an hour into the session. This is really young. I mean, the day is very young. Anything can happen. Now, and this is the report that I give to my subscribers. This is still a follow-up to that. What I'm looking at is that if there is a move that parallels this one here, it doesn't have to go that high. It just has to parallel the characteristic of that H pattern that was the test on the 29th of September of last year, that went white candle doji, white doji, white candle doji, small little white candle doji, strong black candle, white candle. All I want to see is the characteristic of what I call a takeoff. If so far everything has met the criteria that we wanted to see, but as I say, the day is young, but it's really important that the stochastic holds above 80%, and it's almost at 90%. That's good. And the MACD expands, and the histogram from the 0% line, these vertical lines, which are the 9-period differential, that basically says the distance between that green line and the red line is still expanding. To me, that is very good action. So I want to see that keep up. And as I say, we're along the Dow. We have 2 positions along the Dow. And I like what's going on. Now, what's going to be very important, I want to do numbers. The Dow is at INDU. The Dow is at 16,592. You can see there's that resistance, there's that level that we need to see, there's that inside wedge, there's the H pattern that you want to break out to make the cup formation the determinant, not the arch formation. You want the power to be to the right side, moving higher. If the Dow can get by Wednesday or Thursday anywhere into the 16,760 to 16,820 level, that's 17,077 200-period exponential moving average, this coral-colored moving average, that to me would become a target. That would be a fabulous action. Don't want to get too carried away. This is a counter-trend rally so far based on the monthly chart, but I have to tell you something. That monthly chart has improved incredibly from just a little over a week ago. Okay, that's the Dow. The S&P is at this particular point, SPX.X. The S&P is at 1942, up 24.61, leg Now, this is going to be interesting. This is leg B because it made a lower low in that arch pattern. And that says in the lower low, unless you get a buy signal, normally you would fail at the next moving average or peak of importance, and it's taken out all the peaks, even the one on the 1st of February in the S&P at 1947.20. So far, this is really positive action, and I have to call this a leg B, and I suspect that in the Dow, we have to call it not E/B, an alternate count, but really B. But what's really important in the weekly chart is that this is this is a trough E. Count the letters to the downside and the letters to the upside, lowercase on the downside, uppercase on the upside. This is a brand new A. And I will not be happy until I see the cash index, the S&P cash, the S&P 500, trading somewhere in the, I want to get into that ugly candle, that horrible, horrible candle. Remember as January opened, whoosh, came down? Well, I want to see us somewhere into the 1965, 1972 area by Friday. I'd love it by Friday. It could be next week, but I don't care. I'd rather have it this week. Wrap up February with a very nice candle rather than to give it all back, or at least give a chunk of it back. So far, this is good. What about the QQQs? See, the Dow is up 1.23%. The S&P is up 1.30%. The QQQ is up 1.27%. It's in a leg C. It's not that strong, and that's why I was talking about the IBB, the biotechs. I think they're a bit of a drag right now. And I want to see that, it's only up 0.91 in the biotechs. I want to see, I think we took our profits once again. We keep buying it. We were actually, in my opening call, we've been short since 393, way at the top of the IBB, just off the top. And we're still holding that short position, but we keep buying the 2 times long upside because we want to garner as much of a bounce as possible. But what's really interesting is it does seem to be impacting the QQQ. And the weekly chart of the QQQ is fabulous if you're looking at it from the 84.74 aberrational low of the 24th of August. I don't know what is there, boy, good luck to that. It went all the way to 115.75 before pulling back. Now, this is going to be, you see that black line? That's the 9-period exponential moving average. That's been resistance. I want to see the QQQ series by Wednesday afternoon, Thursday morning, somewhere in the 104 to 105 area. We're at 102.87. Actually, it should really be higher. I'm just as conservative as possible. I'm just saying that would be a very conservative level to see, to be able to say that that's really good action. Meantime, I still see the, that's right. Sorry, Terry. We still have the position long in the IBB because I lowered the stop. I wanted to make sure that we could get it if there's another burst of buying later on. But we're still long. We've guaranteed at least a nice profit. Okay, thank you. IWM is trading at 101.59, up $1.12. Now, this is better action. They don't have that many biotechs, I guess, because, look, it's made a low recently, and now it's in leg B, and it's acting quite nicely. It's up 1.12%. I'll be back to talk about it. We'll wrap up this with this next section before my show, Tiger Technicians Hour at 11 o'clock. Stay tuned. I'll be right back with the summation of it.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks. So let's do a little bit of nitty-gritties here. The Dow's up 182, is giving back quite a bit of the gains. They're still holding very well, anywhere over 165 to 175. Says that's reasonable. But if we start to see that later in the day, then I think Brian's going to be able to see that insurance come into play, and that was the Nadex binary. That's a very good trade. I'm looking at the 1 minute of the E-mini sitting right on the 200-period exponential moving average. The 2 minute says 1936.75, and it's at 1937.50. What's really interesting here is I'm going to go to the 5 minute. 5 minutes says, 137, 137, 55. Well, it doesn't trade in 55 increments, but that's what it says. It's going to be very important support. My thinking here is that a chunk of the pullback has been accomplished. There could be a little bit more to go, but it might be more time. That would be normal. But I would say that would be normal if the IBB, NASDAQ iShares biotech sector, if that was holding much better and was up 2 instead of now just being up 70 cents, then I would say, aha, buying is still there. So this says to me that the influence of the biotechs is going to be noticeable, especially on the QQQ series, and we've got to watch real closely. And I still believe that there's buying prevails. And I want you to do a quick look at, if you don't mind, I'm going to go to the I showed the IWM, nice move up. The SMHs, which is the semiconductor index, and I was speaking to someone the other day who said they are shocked at the orders that they're getting for the from the biotech industry. Record January, a real record January. They never even expected it. And a little nervous about that. And yet when you look at the SMHs, which is the semiconductor index, they've had a very nice bounce in the monthly chart. The weekly chart looks much better because it didn't go close to the left side low of August of 45.53. And but this action from the 45 low to the 49 level of today, touching 50, it's really important that that holds. If the semiconductor index at 40 in the 49s right now by Wednesday is able to move up about 1.5 to 2 points, if it's able to get into this whole area of 51 to 51.90s, I think that then we're looking at the chance that the rally could last a little longer rather than just a brief 1.5 week rally, 2 week rally. We could go longer. And that's going to be really important because duration is saying that there is something going on to be able to build a base so we don't smash to the downside like the big bears are looking for. My thinking here is that we're rotating. There's been a rotational correction, and there's been a rotational recession that's gone on. I'll talk about that more in my show coming up in the next hour if you want to stay tuned. So let me just sum it up real quickly because we're about to wrap up. I'm going to go to the Dow. The Dow is up 185. Very nice action is maintained. The stochastics at 89%. That's good. The MACD is good. I suspect that, yeah, you could get a bit of a pullback, maybe 16,520s, maybe 16,500. But I would not be surprised if there is still buying pressure coming in, and then even a little bit of weakness, maybe into the close, into tomorrow, is bought once again, so that by Wednesday we're moving higher. That's the way I'm looking at it. But keep an eye on the VIX index. If that VIX index goes back over 20.20, it's at 1981, this market will give back quite a bit more of the gains. I like what I'm seeing right now. So with that, let me just do two things. One is I'm going to say this is brought to you by Nadex, and I'm sitting in, Basil Chapman sitting in for Tommy O'Brien, and Darrell Martin. And my show, the usual show, is the Tiger Technicians Hour. It's coming up in the next hour. And maybe you want to check out my opening call. I show a lot of analysis of the different sectors, stocks, etc. that we have, as well as those E-minis that we were looking at in the 120-minute chart. And I'm wrapping up right now. And as I do that, I will show you there are legs C up, and we'll still expect a leg D. Thank you so much for being here. I appreciate it. And I'll be back in a few minutes for my usual show coming up.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.